What's up, guys? Welcome back to my channel. It is Fred here. I'm the Chief Market Strategist at Toast Beans. Today, I'm going to be going over the SPY, the drill, the indexes, and I'm going to be talking about my outlook for the next couple of weeks. Now, we had a really big down day on Friday, which I caught because of instinct. So, if you knew that we got a pop on the Fed meeting the following Thursday, we got that sell-off and then the pop up to 691. However, the funny thing is the 691 pop was off of Broadcom earnings, and we couldn't really hold those earnings overnight, and then we got a gap down. And the funny thing is, with the gap down, we got the rollover and the MACD on the 4-hour time frame, and that's what gave me the signal is that we couldn't even hold the 691 high, and I just knew that we had to, consolidate some of these gains. So we rolled over. We got that big drop, and then we hit the 200 moving average on the 4-hour time frame, as well as the 100 moving average. So, what's in store for the markets going forward? Now, we have really big divergences everywhere. We have the IWM hitting record highs, and I believe that because the IWM broke out of this resistance here at around 252, 251, it's coming down to retest the support, and I think the IWM is going to break out again. So because of this, the IWM should drag up the SPY along with the rest of the markets. Now, you notice that the QQQ, right? The tech stocks, they're having a really bad time so far, and that's a big problem for the rest of the markets. Nvidia took a really big hit because of the Broadcom and Oracle earnings, so we rejected off of the 191 level and then retraced all the way back down to 175. I believe that big tech should find its footing over the next few days and should resume higher. And the reason why is because the triple Qs, even though it had the biggest drawdown on Friday, you can see that it hit the 50 moving average and the 20 moving average at the same time. So I don't expect a breakdown of the triple Qs right away. You can see that the MACD is starting to roll over on the daily time frame, kind of similar to what we had back here at the top, but I think this has to be confirmed. So this could be a fake out on Friday, get all the bears excited over the weekend, and then we pop right back out. If that's the case, I'll be looking for slightly higher highs on the triple Qs and on the S&P 500, while the IWM continues to make new highs. Same thing with the Dow Jones Industrial Average. You can see that it popped a new high similar to the IWM, and we got a breakout above prior resistance. That bodes well for kind of the broader market. But you can see that on the MACD, it hasn't rolled over yet. So that's a big clue to me that if we were to see this broader market selling off, we should see the Dow roll over, the IWM roll over, kind of what we saw in November, where the IWM was forming like multiple, bearish divergences on the daily time frame, and it took a bigger hit, right? And then we found a bottom, and then we started to rocket back higher. So I believe that if the broader market were to sell off again, we should see the IWM, the Dow, the triple Qs, everything start to roll over. But with the IWM and the Dow making new highs, that's a little bit less likely. Now, I am looking at this, potential bearish divergence setting up on the bigger daily time frame, but, nothing has been confirmed yet. The MACD is still looking bullish, so we have bullish momentum on both the small caps and the industrial stocks. And if the Qs can show some strength, then we can see the SPY, the overall markets rally again. So, I'm a little bit skeptical of the candle that we got on Friday, even though, a lot of people are on Twitter, on YouTube, they're claiming that, wow, this is, if they're bearish, they're like, wow, this is a big improvement. I told you so. This is a distribution pattern, but it has to be confirmed, right? So, until we break the 20 and the 50, which I think to me right now, it's a little bit less likely, then yeah, we're probably going to go lower. But until then, I think that this is a fake out and we should be able to rally higher and get that Christmas rally. So hopefully that helps. And then next week we have some economic news. We have on Tuesday, we have the employment report, which is delayed. We have unemployment rate. We have retail sales. We have the PMI. And then on Monday, we have Fed Governor Stephen Moran speaking as well. And then on Wednesday, we have a few more Fed speakers. And on Thursday, we have that CPI report. So, and on Friday, it's that OPEX week. So, where a lot of options expirations expire. So that's going to drive the markets next week. And, given all this bearishness that we've had so far, given that like massive rally over Thanksgiving week and then the consolidation, and then we got one bearish candle, and a lot of bears are just calling for, tops. I told you so. We're going to crash. I think the path of least resistance is still higher. So, I could be wrong, and then we get a gap down and go on Monday and then the rest of the week. But until that's the case, I remain cautiously optimistic for the overall markets heading into the end of the year. And yeah, I hope this helps. Thank you guys for watching my video. And if you have any questions, you can find me on Toast Beans. You can join my Discord. And I'll see you guys soon. Thanks.